Alrighty. Good morning, everybody. We're going to jump right in. Welcome to the Hurley Investments Trade Findings and Adjustments of June 22nd, 2023. Hopefully we'll get a few more people jumping in. But gonna start anyways. So talked a little bit about last time about the importance of following the trend, and instead of anticipating what you think might happen. We did get protection off on most things, excuse me, last week. But that was also mainly because a couple things were expiring and excuse me, and the market was still heading up. This week we haven't gotten some follow through that we'd hoped for, but we did talk about the possibility that it might come back a bit, pull back after a really nice 3-week run, 4-week almost, in our market, that we might, the idea was that we might see a little profit taking. And that's definitely been the case, but we also have the fact that the Fed has had interviews, been at the Capitol answering questions to lawmakers, and all he did was just reiterate the same things he said the week before during the FOMC meeting and rate decision announcement, which was that they still have inflation that needs to get under control, and so they're not done raising rates, but that they're slowing down. Those were the words he used, and he reiterated again. So I don't know, kind of a bit weird that we get the same thing and the market's pulling back, but I also think it's kind of pulling back a little bit into reality, that things might not just take off crazy from here, but we're going to have a few more months of some up and down. But again, as we've talked about several times, this is just the last 6 months, but we keep getting higher highs and higher lows. Not so much through here, but definitely up to the last little while. And that goes all the way back to October, really, of last year, that the market has steadily been coming up on the thought that rate increases are slowing down. I would think to really continue to set these higher lows and higher highs, we need to continue to see the Fed, quote unquote, slow down their rate hikes, which the fact that they skipped June for raising rates suggests that's exactly what they're doing. But of course, we need to continue to see inflation and employment, economic numbers continue to be favorable towards what the Fed is wanting to see. So, thoughts or questions on any of that? We'll go more into what we've been looking at this week. We had a question last time about the best time to buy or sell off puts, and it kind of went neatly into what we were talking about of not trying to outguess the future or anticipate where the market is going to go. My reasoning was, let's not try to time the market so much, time the stocks, time the technicals. We're trying to focus on the reason why we're adding or taking off puts. Main reasons, of course, earnings. Last couple of years, it's been rate hikes. And on a nearer term basis, it's technical analysis. And I'll also add, now that I'm kind of looking back on this, technical analysis grouped together with the current news for broad economic news, but also individual stock news. I'll give you a good example of that one, technical analysis with comparing with the news, good or bad, right? And then you like to hear Kevin say this a lot, and I've reiterated several times, is you don't have to be right when you're adding puts or when you're taking off puts. You just have to have a good explanation, good reason why. You have to be able to explain why, and sometimes that for you guys that are trading your own portfolios, that means explaining to your spouse, kind of someone to be accountable to other than yourself. And for me and Kevin, it's we have to justify it to each other. A lot of times we'll go back and forth and argue a little bit about what the right decision is, and come to maybe a consensus, or sometimes we'll choose to do different things, but the idea being someone you've got to be accountable to, discuss things with, and explain why. And obviously, you guys as clients, we have to stand ready to explain our decisions to you. Questions so far? So, good example of some technical analysis as well as news. We see a news event that is causing some movement in a stock. We judge whether the stock is technically holding a support level or if it's breaking a support level, and then we make a decision on adding puts. And maybe this is a little backwards because today we got news on Boeing that one of their suppliers, one of the companies that supply parts for Boeing, is on strike. I do feel like it's a bit overblown, but 211 down to 205, 206 overnight. Luckily, we had 210 puts already on as it kind of came down, broke this level pretty quick a couple days ago. Broke below what I see as a support level, 215. And and wish I could have got them on a bit higher, but again, that kind of moved fairly fast and got on 210s as best I could. Pretty sure they're 210s. Trying to remember. If not, they're 215s, but I'm pretty sure they're 210s, and certainly looks much better today having that protection on. Why was, in my feeling, it overblown? Because Boeing has several suppliers. They don't always just rely on one company to supply parts. I am not sure yet. I've got to do a little digging to see if the company in question is their sole supplier for the specific part they're needing. But in addition, those supplied parts, you would hope they'd have an inventory. They could still continue production for a while until this strike of this company that supplies the parts for Boeing is back to normal, but could create a bit of a hiccup longer term. And stepping back a bit, it certainly doesn't say anything about the demand for Boeing's planes. That really just that ups the demand because the supply is, if it's slowing down, is getting kind of strained, right? So we'll see how that goes. Breaking that 50-day. Certainly not thinking right now of taking those puts off, and probably won't think about it until 197, 198 to see where it builds a base. I'd hope that they would build a base at a higher high, because it's just kind of gone in this really volatile range around 215 to 200 somewhat. Just broke above that in the last couple of weeks, which looked great, and then just couldn't hold it with this issue. So we got protection on at 210 strike puts. Now having a supplier of parts, a company that supplies parts for Boeing. Going through an employee strike. It's nice to have that protection on beforehand. We're making about half up of the movement today with those puts. What else? We've got Disney. Disney couldn't even get to the 50-day. Couldn't hold this pivot point below it, and I got puts on at 90, which it's not amazingly higher. Should have, would have, could have. Wish I had gotten them back on up there at 93. as it didn't hold that, but it was kind of going sideways at that point. And I thought the upside was up to that 50-day where we'd look to get on 95 puts. So didn't quite go the way I thought, but again, with the principle of not trying to anticipate, maybe you could argue that was anticipating, but take a look at it without the drop there. At this point, there's no reason why that stock on this day can't be seen heading in the trend of towards the 50-day. So not necessarily was I anticipating, I was following where the trend looked to be going until this day where that trend reversed. Couldn't hold that, really kind of a crap down day. So I looked to get 90 puts on. Uh, 90 puts on. Could only even go down to 87. That's the last low. So we'll look to see it confirm holding an 87 price point. Hopefully we're just taking those puts off for a little profit or break even as it makes another attempt to go up, but we'll wait and find out. What else did we do? Baidu. Baidu had a really steep vertical trend here that I saw, if you can kind of imagine that line. And once it broke that pivot point, I made the decision we needed to get 141 puts on. It's holding up nicely today, but it's come down from 150 and felt that was prudent to get some protection on Baidu. I was kind of like Disney. I was expecting it to get to a resistance level, and for Baidu, that was up at 160. You can kind of see both times there where we would have had a more confident area to get protection on to, and on the event it couldn't get over 160 if it was struggling there, but it never did that, so kind of frustrating. And doesn't seem to be news on a rhyme or reason why. So we're just trying to follow what looks what the technical trend looks like. And then this morning, I mean, I was looking this morning, everything was down. It was pretty nasty this morning, to be honest. And then slowly Apple went positive and Google went positive, Baidu slightly went positive, Visa, Meta was positive at one point. But Ford hitting opening below that 14, which was $14 was my line in the sand. And this almost looks a lot like Baidu, kind of this really steep trend and not looking like it wants to hold it, but I do feel like this is so steep you kind of expect somewhat of a pullback before things start to turn back up. Way overbought. Baidu hadn't really, it touched overbought but didn't really get overbought. I guess it did kind of last several times it's touched, it's pulled back, and maybe that was another reason that I thought it was important to get protection on there. But for this one, that line in the sand was that round number 14, and it bounced, just kept going right back up nice and steady through the morning, so I held off on that. At the same time, we're really pretty close to this high of 1450, so if we start to head back up there, might make sense to get protection back on at 1450, just to hold some profits through this period where the stock market is just not sure where it wants to go. Bank of America convincingly falling below that 50-day, and I got 2850 puts on Bank of America. $28.50. Was holding the 50-day for a couple days, pretty nice, but today it is not. And that was kind of my line in the sand. Not kind of, that was my line in the sand, but here we have this low. You can even go back to this low. Let me get a better marker here. Sort of some higher highs. I mean, it's not, it looks small because, the chart looks that way, but 26, 36, 20, just under 27, just over 27. These are fairly large movements for a $28 stock. So getting some higher lows, but not necessarily some higher highs. Kind of coming to a narrow point where it might see a breakout one way or the other. Market still isn't, kind of bafflingly is not convinced that banks are the place to be buying into. today I think it's Fed Powell speaking on um, the banking crisis to back in earlier in the year with Silicon Valley Bank and the others. And I guess for some reason that is putting some worry again in the market, but I don't understand why. Kind of is nonsense. And, you know, the big banks never had any issues to worry about. So, and they've been making great money on interest, higher interest rates. If you guys can explain that to me, I would love to hear it. But, you know, if the market always made sense, we wouldn't have stocks that were undervalued to be buying at a discount. Guys, that's really it. I just wanted to give you a bit of an update on some things I was looking at. Had some optimism last week that things were uh, on the up and up, and maybe they still are, and maybe we're just getting a bit of a pullback because of how quickly the last month has gone for the market in the up direction, and things are just cooling off, coming back to a median before setting a higher low and continuing on again. But as usual, I've just been watching individual stocks and using the best decisions I can with watching the technicals to where we need to get protection back on and let others run. You see Apple still holding steady and just pushing that upper overbought line on the RSI. I'm pretty happy with where Apple's at. Meta looks fairly similar. A week where it just kind of goes sideways and cools off on being overbought several times. But some really nice steady trends, bullish trends for those ones. And a few that are going sideways and holding support levels, 120 for Google. Another one I was looking at this morning as it was below 120, but it's had some buying power to keep it above there. Visa, another sideways one, but staying above 220. Can't get above that 50-day, but it's also not really falling either. So just my thoughts, and just to give you an idea of some of the things I'm looking at and the decisions that I've been making. Are there any questions from you guys? Going once, twice? Dave said, can you explain why the market is going up one week and down on the next week with the same news? So I think the run up again into the Fed announcement last week was the market anticipating what was going to happen and what did happen, which was a skipping of the June rate hike. And maybe it's a bit of selling the news afterward. Usually that happens the day after, not necessarily the week after, but up into Friday, all the way up. But you can kind of see it got really parabolic, overbought. So I don't think it's necessarily moving on the news. I think up to that point it was, but at some point there's got to be a bit of a pullback. When you get overbought, when you're starting to go parabolic. I mean, the news was nice that we skipped a rate hike in June, but it's not like it was amazing. It's not like we're out of the woods and we're done raising rates. But it's certainly getting more and more positive as time goes on. So I guess my answer, Dave, is we're still following a bullish trend, and this is a small 1 week pullback to bring us back to median, to bring us back to reality. There's a push and a pull, and it's been happening the whole last several months. Push, fall back, push. Really pretty sideways through April and May, but taking off in June, obviously. Any other questions? All right, guys. Well, thanks for joining me. As always, take care. Have a good weekend. I believe Kevin should be back for the Monday night commentary this coming Monday. That is the plan so far, and looking forward to seeing you there. Take care, guys.